45 years, 0 name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
Cool. Well, thanks so much for joining me tonight for our presentation on Flip Faster, Build Smarter, Quick and Reliable Financing. My name is Stephanie Miller, Private Lending Manager here at Marshall Reddick. I've been with the company for 8 years now, and I see a lot of new faces on the call tonight, which is awesome. I have my contact information on the screen. I have my email and my personal cell phone. Would love to hear from each and every one of you. I spend a lot of my day on the phone with new and old borrowers and would love to have the opportunity to speak with you, answer any questions you might have, and run through any deal scenarios that you might be working on. So please don't hesitate to reach out. Before we dive into tonight's presentation, I want to take a couple of minutes to go over what exactly Marshall Reddick does as a whole. We're a one-stop shop, if you will. We have 3 different departments, I guess 4 different departments. We have a real estate brokerage arm where we help people buy and sell real estate. We also have a property management division where we help folks manage the property that they own. We also have the private lending division, which we're going to go over specifically tonight. And we also have an investment funds division where we help people invest in mortgages and investment funds. All of the markets I have listed on the screen are markets in which we have a brick and mortar office and can help you buy and sell real estate, manage your property, and of course, lend to you. But in addition to those markets, we also lend in a lot of other states. So all of the states that I have on the map here are states in which we're actively lending in. If you have any states that aren't on this map that you're actively doing business in, please feel free to give me a call. This isn't an end-all be-all map, but it is a good overall, and I'd be happy to speak with you to see if we can assist you in one of the states that isn't listed on this map. In terms of tonight's agenda, we're going to go over exactly what Marshall Reddick offers in terms of private financing. We'll compare what traditional financing is versus Marshall Reddick's private financing and take that a step further to discuss how Marshall Reddick's private financing is different than maybe some other private lenders out there. We'll go over what we call our common sense approach. While we have several different loan programs, we're going to specifically talk about our fix and flip and new construction program tonight. We'll go over our underwriting process and what it looks like from loan application all the way through funding. Most of the loans we fund on the fix and flip and new construction side of things have a draw process, right? We're lending either renovation or construction funds, and so we'll go over what exactly that draw process looks like. We'll have some time at the end to go through some real life examples of recently funded deals that we have funded, as well as some facts at the end, frequently asked questions. So right out of the gates, Marshall Reddick offers private financing. It's super important to note that we're a non-owner occupied lender only, right? We just don't have the licensing to do owner occupied loans. So all of the loans that we offer are strictly non-owner occupied. Also, we're a residential real estate lender only. So residential investment purpose loans, we can go up to 4 units. That's our bread and butter. We also can go up to 10, 15, maybe 20 unit apartment buildings. So, small multifamily. We just can't do anything on the commercial side, such as strip malls or hotels or gas stations or things of that nature. We also offer purchase refinance, rate and term refinance, and cash out refinance options. So whether you're looking to purchase a property, whether you're looking to just simply replace the debt that you have on a property or tap into the equity that you have and do a cash out refinance, we can help in all 3 of those scenarios. And we also have a non-recourse option for retirement accounts. This is super cool because a lot of people think that if they're purchasing property in their retirement account, they have to purchase it with cash. We offer non-recourse financing specifically for retirement accounts, and so instead of purchasing 1 property in all cash, we can assist you maybe purchase 2 or 3 properties that you would have otherwise purchased 1 property with cash with. So what's the difference between traditional financing and private financing? So in terms of a traditional lender and other private lenders, they typically will sell their loans, right? Marshall Reddick does not sell their loans. The reason why this is important is because when another lender sells loans, they're not only have to adhere to their guidelines, they also have to adhere to someone else's guidelines, right? Here at Marshall Reddick, we are a balance sheet lender, and so we don't sell any of the loans we originate, and therefore we only have to adhere to our guidelines, not necessarily someone else's guidelines. We do not require a hard credit pull. We actually don't report to credit, which is a big value add in working with us. Other traditional lenders, whether that's a conventional lender or other private lenders, are most of the time going to require a hard credit pull. Also, other lenders and other traditional and private lenders are going to require a personal guarantee. So a traditional lender, so someone like CMG or Bank of America or Wells Fargo, is going to, only be able to lend to you personally, whereas other private lenders, more times than not, are only going to be able to assist you if you have an LLC or an entity or a corporation. However, they're also going to take it a step further and require you to sign a personal guarantee. At Marshall Reddick, if you're using an entity, we do not require you to sign a personal guarantee. Also, the difference between other traditional lenders and private lenders and Marshall Reddick is substantial documentation. So I don't know if those on the call tonight have gone through a conventional loan process. There's loads of documentation, loads of red tape. Same with a lot of other private lenders. Here at Marshall Reddick, we keep it simple and we have a very small documentation list, and we want you to spend your time on what you do best, and that's investing in real estate, flipping property, building new construction, not necessarily, worrying about needless red tape or needless documentation. So we take a common sense approach, right? So we're not going to require that hard credit pull. We're not going to verify your income or your employment. We don't care, if you've been at your job for a month or 24 months or 10 years. We don't care if you are unemployed. We're also not going to look at your tax returns or similar documentation such as your 1040. And we're also not going to run any debt to income ratio calculations like a traditional lender would. None of that is relevant to us in collateral-based lending. We're also not going to require an appraisal. This is huge, right? So a lot of other lenders, fix and flip and new construction lenders, are going to require an appraisal. And the problem with requiring an appraisal is it not only costs $700 or $800, but it also takes 1 or 2 weeks to get back. And so a lot of times when you're fixing and flipping property or you're buying a property at a deep discount, you have to close quickly. And so requiring an appraisal is what limits you from having the ability to close quickly. So us not requiring an appraisal is huge in that we can help you close very quickly. So what is relevant in collateral-based lending? Well, the borrower's skin in the game, right? So how much cash you're bringing in for a down payment, how much reserves you have. We also care about the collateral property and the value, right? Are you purchasing the property for a good deal? Are you paying over current market value for it? Is it in a good location? Is it in a good zip code, in a good school district? What kind of equity do you have in the deal? We also require, or not require, but care about rather, your background and experience, right? We want to know that you have been a real estate investor in the past, and the more experience and more background you have in fixing and flipping and new construction, the better. So we take a much different approach. We have our own guidelines, and our program is really built by investors for investors, right? We have flipped property before, we have built new construction, we're rental property owners. So this program was built by investors for investors. We understand exactly the ins and outs and the type of financing that's needed in order to be a successful real estate investor. We also have no red tape, and super big, we're transparent and reliable. We're not going to bait and switch you. If you send a deal over and I just don't think for whatever reason it's going to fit our wheelhouse, I'm going to tell you. I'm not going to input the loan application and hope for the best that, we can get it through underwriting and ultimately close. I can't tell you how many people I have call me in the last couple of days saying, hey, I'm supposed to close this transaction in 3 days. This other lender, had a slightly better interest rate or slightly lower fees or slightly better whatever, and they just completely bait and switched me, and now everything is just starkly different than what they promised me in the beginning. We're not going to do that to you. We're super transparent and we're reliable. What we tell you on the front end is what you're going to get on the back end. We also can close very quickly, right? Our average turnaround time frame is 7 to 10 days. Of course, the more time, the better for everyone, right? So the traditional 2, 3, 4 week closing is preferred. However, our average turn time is 7 to 10 days, and we can close even quicker than that in some cases if needed. We offer loan programs for all kinds of unique borrowers. So we can lend to you individually. A lot of other private lenders cannot lend to you individually, so no entity is needed. We can also, however, lend to you if you do have an entity, right? So if you're using an LLC or a corporation or whatever it might be, we can lend to you in that entity, and we're not going to require a personal guarantee. We can also lend to foreign nationals. This is huge, right? So no visa is needed. And if you're a foreign national, we can lend to you in one of two ways. We can either lend to you personally in your personal name. You just have to have an ITIN number. That's an international tax identification number. Otherwise, if you have an LLC or a corporation or some kind of entity that is registered in the United States and therefore has a US tax identification number, then we can lend to you in that entity as well. And then also non-recourse option for retirement accounts. So our non-recourse option is only allowed for retirement accounts, but if you do have a self-directed IRA or a self-directed 401k, we can help you if you'd like to purchase property using that vehicle. So we have several different loan programs. We have 4 of them. We're only going to dive into 2 in depth tonight. That's the renovation and new construction program. But we do have a renovation program for fix and flippers and BRRRR investors. BRRRR stands for buy, renovate, rent, refinance, and repeat. We also offer our new construction program for small home builders, right? So that's ground up new construction where we help you go vertical. We also have a bridge program for those wholesalers out there. Wholesale is kind of a buzzword nowadays where it's when someone purchases a property at foreclosure or pre-foreclosure or probate or some avenue where you need to close quick and you're able to buy property at a steep discount. And instead of renovating it, you would just clean it out and simply put it back on the market for current market value. And so our bridge program is great for those wholesale investors. We also have a rental program, so DSCR, debt servicing coverage ratio. That's where we underwrite based on the income of the property as opposed to you personally as a borrower. We also have a rental program. We're just not going to speak about it specifically tonight. So if you are interested in our bridge or rental program, feel free to give me a call and we can discuss details further. There's 2 ways to access our loan programs online. You can either go to marshallreddick.com, hover over borrow and go to loan programs. Otherwise, you can go to marshallreddick.com/loan-programs. Once you get to our website, you'll see that you can download each of our rate sheets. So to start, we're going to go over the renovation loan rate sheet. So if you go to our website and you would click download rate sheet, this is what you're going to see. So all of the different programs within our renovation product, as well as loan to values and fees and all of that good stuff. So you'll see that our renovation loans offer a 12-month term. We can reduce that, however, to a 6-month term if you are confident that you only need 6 months and you're going to be able to pay off the loan in the allotted time, then we can do that for a reduced origination fee. Our interest rates range anywhere from 8.75 to 12%. A question I get asked a lot is, what is the difference between the rate and the APR? It's a great question. The rate is the interest rate in which you're paying, right? So if you borrow $100,000, you're paying at the 8.75, 9.75, 10.75, or 12%. However, the APR takes into account the loan fees, right? So it takes into account not only the 8.75 interest rate, but it also takes into consideration any points or lender-related fees and expresses it as a percentage so you can see your more true cost of capital. All of our loans offer interest-only payments, so you'll be paying interest on a monthly basis, and then at the end of the term is when you would simply owe the principal back. Our loan to values also range anywhere from 75 to 90% of purchase, and we will cover 100% of renovation funds. So you'll see our programs tier up in terms of interest rate. So the more you put down, the lower the interest rate, the less you put down, the higher the interest rate. However, we are subject in all 4 programs to 70% of after renovation value. So our max is going to be whatever 70% of underwriter opinion of value is. But of that 70% of underwriter opinion of value, we will go up to 90% of purchase and 100% of renovation. Minimum down payments do apply. So while we don't necessarily have a minimum loan amount, which is a huge value add in working with us, I know a lot of other lenders out there, some have as high as, $150,000 in terms of a minimum loan amount. So while we don't have a minimum loan amount requirement, we do have minimum down payments, right? So anytime you're purchasing a property under 100,000, you are going to be subject to a minimum of $10,000 down payment for our fourth program. Otherwise, it tiers up from there. And like I mentioned earlier, we can also close within 7 to 10 days, right? And that's huge because no appraisal is required, and that allows us the opportunity to close very quickly if you need a quick closing. Next are our new construction loans. So again, if you're on our website and you're under our loan program section, you would want to download the new construction rate sheet, which would take you here. Same thing, right? Our terms for our new construction loans are 12 months, but we do have 6 to 12 month loan terms available, right? We understand that if you're building a larger property, or if you're building in a market where maybe the city and the county have more requirements, or they just drag their feet in terms of giving you your permits and inspections and that type of thing. We do offer loan extension terms. So if you need, an 18th or 24-month term, no problem. Our rates for new construction range anywhere from 8.95 to 11.95%. Again, the difference between the rate and the APR is just the fees expressed as a percentage. And you will be paying the loan back in interest-only payments. So again, you'll be paying interest on a monthly basis, and then whenever you go to pay off the loan, you'll simply owe the principal back. We'll finance anywhere from 85 to 100% of the construction cost, right? So as long as you own the land unencumbered, we will finance up to 100% of your construction cost, subject to 70% of after construction value, right? So same thing here. We will finance 100% of the construction cost as long as it's no more than 70% of after construction value, and you must own the land free and clear. We also released our renovation, or in this case, construction funds, in a reimbursement style fashion, right? So typically the draw schedule that we would use for new construction is the first draw would be released at slab pour, the second draw released at trusses and framing, the third draw released at rough-ins, right? So rough-in electrical, rough-in plumbing, rough-in HVAC. The fourth draw would be released at drywall, and the fifth draw released at completion. We're reasonable, right? We take a common sense approach to our lending. And so if that draw schedule doesn't work for you, I'm sure we can structure a draw schedule that does, right? A lot of times people will want an additional draw or two in between drywall and completion. If that's the case for your project, no big deal. As long as, again, it makes sense, it's common sense approach, we can make that work. For our new construction, we're typically operating between a 2 and 3 week close. There's just a little bit more that goes into new construction, underwriting and projects. And so still extremely quick, under 30 days can get you closed, even quicker than this if you need to close quicker than 2 to 3 weeks. But that's a good average turn time. If you need a pre-approval letter, no problem, just ask. A lot of my day is actually spent running through scenarios with borrowers and giving them pre-approval letters so that they can get their property under contract. In order for me to provide you a pre-approval letter, I just need a copy of your most recent bank statement, right? We just want to confirm that you have the available funds that you need in order to do the deal. We would need to know the loan type, right? Is this a renovation loan? Is this a bridge loan? Whatever the case might be, no problem. Just need to know what kind of loan that you're looking for. We'll also need the subject property address and your offer price. The reason why I want the property address and the offer price is because I am going to draft a pre-approval letter that is specific to your property, right? So it's going to show the seller and the listing agent that I've actually reviewed the property specifically, and we're also going to draft the letter for whatever price that you're offering, right? So in this case, if I was offering $625 for 123 Main Street, that's what I'm going to show that you're approved for, right? We don't want to show the seller that you're potentially approved for more than what you're offering, because then they might be less inclined to negotiate with you. So if you are initially offering $625 and end up getting into a bidding war and ultimately needing to settle at $650, no problem. Just circle back with me and say, hey, Stephanie, I need a pre-approval letter now for $650. I can send it to you within 30 seconds, no big deal. But overall, we want the seller and the listing agent to feel confident about accepting your offer. And so I always encourage my borrowers, my buyers, to let the listing agent or seller know that they're more than welcome to call me. I put my contact information at the bottom of the pre-approval letter so that they can call me and I can just instill confidence in them. Yes, no problem. We're going to be able to get this deal done on time, and we'll have no issues when it comes to the loan side of things. So once you have a property under contract, we would want to input a loan application. There's two ways to input a loan application. You can either go to marshallreddick.com and hover over borrow and click loan application. Alternatively, you can go to marshallreddick.com/borrow. They'll both take you to the same screen, which I have here. It'll take you through a small questionnaire. You'll want to press private financing. If you press conventional financing, you're not going to be able to progress in the process. It's going to give you the contact information for our preferred lender, Reed Hazard. So you'll want to click private financing, and then it's going to take you through a very short questionnaire, right? There's 5 questions on here. Is it a purchase? Is it a renovation loan? Once you get through that, it's going to take you into an actual loan application screen. It looks more in depth than what it really is. It should take you all of about 10 to 15 minutes to fill out. And what I like to do is actually fill this out on your behalf, right? So what I would prefer to do is get on a call with you and I can input all of this together with you over the phone on your behalf. And then once we're wrapped up and everything is filled out correctly, then I can send it to you for signature and you can be on your way. Alternatively, if you want to fill it out on your own, no big deal. I'm more than happy to send you the link. Otherwise, you can go to our website and hover over borrow loan application to get there. Again, it would take all of about 10 minutes. There's, not much here. Once the loan application gets submitted, that's when we would get the underwriting process started, right? So you input the loan application, I get notified. I'm going to reach out to you right away to let you know that we received your loan application, and I'm going to ask you for some additional documentation, right? Again, we don't have a very in-depth requirement in terms of loan documentation or documentation to get your loan done. I have a very short list here, right? Where you need your purchase contract, your scope of work, or your construction budget. We need photos of the property. We need comps. I always like to have a copy of your comps so that I can submit those to underwriting so that we can hopefully use those comps and boost up your after renovation value. We'll need your bank statement, right? We're not looking to source credits or debits. We're just looking to see that you have enough money in your account to do this deal, right? Do you have enough money for the down payment? Do you have some reserves for a few monthly payments? And do you have enough money to get the project started? Because all of our draws are going to be done in a reimbursement style fashion, and you're going to want to have the ability to at least get the project started before we release the first draw. We'll also want your entity documents and driver's license or passport if you're a foreign national. And then we'll also want your insurance and escrow agent contact information, because I'm going to reach out to them and just introduce myself and let them know that we'll be in contact with them soon. Once we have all of the documentation that we need, I'm going to assign you to an investment analyst. From there, the investment analyst is going to be the facilitator and get us through underwriting, right? They're going to reach out and ask you any questions. They're going to communicate between the underwriter and us, right? The borrower and myself. And ultimately, they're going to ensure that underwriting pulls comps and basically values the property, right? So we're going to value the property both in its current market value state as well as the after renovation value state. And then once we've valued the property and have fully underwritten it, then we're going to circle back and issue you loan terms, right? So here's our opinion of after renovation value based on 70% of the ARV. Here's what we're willing to lend to you, and here's your down payment. Here's what we're releasing at closing. Here's what we're covering in terms of the renovation or construction budget. All of the terms are going to be there for you to review, and I'm more than happy to answer any questions that you might have in terms of those loan terms. Once you say, yes, I'm good to proceed, then we're going to wrap up, underwriting, source the capital, and proceed to close. So it's a super easy, streamlined process. Once the loan is closed, I'm going to assign you to a funds control analyst, right? Or your investment analyst will assign you to a funds control analyst. The funds control analyst is essentially going to send you a draw schedule for you to fill out, right? We're not going to tell you how to run your project. You tell us how you want to run your project, right? So you ultimately tell us exactly what kind of draw schedule you want. As long as it's reasonable and makes sense, we should be good with it. Something that's important to note is we have no formal draw inspection needed, right? This is a big value add in working with Marshall Reddick. A lot of other lenders are going to require a third-party inspector to go out to the property to confirm that, the work is done. That not only takes time, but it costs money. On Marshall Reddick's side of things, we only require inspections when the city and county requires it, right? So let's say you're doing a new construction project and the county or the city requires an inspector to go out and sign off once you have your slab poured. Well, of course, we're going to, require the inspection because that's what the city and county does. But in order to get a draw, we simply need a clear walkthrough video or photos showing that the work that you say has been done is done. As long as we can get clear walkthrough video, right? So starting from the exterior, walking around the property, walking through the interior, showing us the entire house, we should not need to send a third-party inspector out. So how to submit a draw, right? So once you put together the draw schedule with your funds control analyst, you're going to reach out to them and say, hey, I'm ready for my first draw. They're going to send you a link that you'll be able to upload any video evidence and photographic evidence to. And they're also going to send you a draw form, right? So the draw form's super easy. You can do it from your cell phone. You just put together a list of items that you've completed so far, what percentage of items or what percentage of the project you're complete, and then they'll review everything, send it to the lender for final approval, and you can expect to receive your funds within 3 to 5 business days. And a lot of times we can get the money to you quicker than 3 to 5 business days, but 3 to 5 business days is a good turn time. So now that we've gone over the process, right, in terms of what it takes to get a pre-approval letter, what it takes to submit a loan application, and what it takes to actually get a draw, I wanted to go over a couple of real life examples in terms of recent fix and flip and new construction loans that we've funded. So in this case, we recently funded a loan, fix and flip loan in Fort Wayne. The loan amount was $162. The interest rate was 12%, right? In this case, the borrower wanted to put less money down and therefore pay a little bit higher of an interest rate. Their monthly payment is $1,620. And I have on the bottom of the screen a little bit of details regarding this specific project, right? So the borrower purchased the property for $150,000. They're going to put $35,000 into the renovation. Marshall Reddick's opinion of after renovation value was just a little bit lower than the borrower's estimate. No big deal. We were still able to extend them $132,000 towards their purchase, which is almost 10% down. And then we were able to fund a majority of their renovation funds. So you'll see that this is a very workable situation for the borrower. Next, we have a recently funded new construction loan, right? So in this case, it was in Paris. It was for someone who was building a, custom home build for $918,000. We were actually able to get this borrower just a little bit of money towards their closing costs, right? So we were able to release 22 grand at closing to help them, cover their closing costs. They had already purchased the land. And then we were able to finance their $918,000 construction budget. So you'll see that they want their draw schedule to be released in 10 or 11 draws. So as they get the slab down and the trusses and the framing and they start progressing with the project, they'll send us video evidence that everything's been done, and then we'll reimburse them for that work. You'll also see in this case, right, I mentioned earlier that we do offer extensions. So while our typical loan term is 12 months, this borrower needed a little bit more time to get the project done. It's custom build, right? So it's going to take a little bit longer than 12 months. So we were able to get them approved for a 15-month loan term. So some frequently asked questions that I get a lot that I wanted to cover is, can we discuss my deal before I get it under contract? This is huge, right? A lot of people want to know that they have the financing that they need in place before they go and get a project under contract. So while we can't fully underwrite a deal until we have a loan application and a purchase contract and the scope of work and everything in our system, I can provide you just a rough estimate of what it might look like for financing, right? So if you send me, hey, this is the purchase price and this is the estimated renovation budget and this is my opinion of after renovation value, I'm more than happy to run some numbers and give you a few options based on your numbers, right, in terms of what we can offer on the financing side of things. That doesn't mean that they're final terms. We're still going to have to input a loan application once you get the project under or the property rather under contract, but it'll be a good ballpark estimate so that you can have confidence that A, we're going to be able to lend against the property that you want to put under contract, and B, you'll have a good understanding of, you know, a rough estimate of what financing might look like. Can I do more than one loan with Marshall Reddick at a time? The answer to that is yes, absolutely. Right? We just want to know that you have the liquidity to do more than one deal, right? So we're going to look at your bank statement in a little bit more depth and make sure that you not only have the cash needed for, you know, the first deal that we do, but also for the second and third. I want to keep my fix and flip as a rental. Can Marshall Reddick help me with refinance? Absolutely, right? So we went over a little bit earlier that we do offer DSCR loans. So if that's something that you're interested in, I'm not going to spend time tonight to go into our DSCR program. I will schedule another webinar in the future to go over that specifically. There's a lot that goes into you know, DSCR lending, and it's much different than fix and flip and new construction. However, we make it much easier than a lot of other private money lenders out there, and we can absolutely help you refinance your short-term loan into a long-term loan, whether you want to tap into some cash, right, and get some cash out, or you simply want to do a rate and term refinance. Does Marshall Reddick work with loan brokers? Absolutely, we do, right? I work with many loan brokers. If you're a loan broker, feel free to reach out. We can discuss details and I can answer any questions you have, and I would love to start working with you on the loan broker side of things. Where does Marshall Reddick get the money to originate these loans? It's a good question. Earlier, I mentioned that we have an investment funds department, so we can help people invest in mortgages or trust deeds, and we can also help you invest in our mortgage fund. Our mortgage fund is for accredited investors. The minimum investment is $25,000, and we produce great returns, super passive, super safe. So if that's something that's of interest to you, please feel free to reach out, and I'd be happy to answer any other specific questions that you have in terms of either becoming a mortgage fund investor or a direct mortgage investor. That's all I have for tonight's presentation. I wanted to keep it short and sweet. So again, my name's Stephanie Miller. Thank you so much for taking time out of your night to be with me. I have my direct contact information on the screen, so feel free to send me an email or call or text me. This is my personal cell phone, and I would love to discuss details about your next deal as well as answer any additional questions you have. So again, thanks so much for joining me, and I hope everyone has a great night.